Hello everyone, welcome back to Mindful Finance. In today's video, we are diving into how the upcoming elections in India and the BJP's potential re-election could create investment opportunities across various sectors. Whether you are an investor looking for growth sectors or just curious about the economic impact of these elections, stick around for some insightful analysis. And this is Sundar, and you are watching Mindful Finance. Okay, so today I'm not sure like how many of you have gone through BJP's manifesto or Congress manifesto, their plan, and if they come to power, what they will do, kind of a thing. But for now, we are going to focus only on BJP's manifesto. The reason behind is, see, I'm not into any political biased opinion or anything over here. This topic is not related to any political opinion. This is clearly for investors like you and me. If you are interested only on stock market and the investments, continue watching this video. It is not going to relate to anything about politics. Okay, that's the first thing I want to highlight. The second thing is, the reason behind this video is I'm trying to post during the election, not before election, so I'm not trying to market or anything over here. Just this is for a clarity that how you have to be prepared, and later point of time you should not think that you are not up to date or you are not following the trend, right? That's the only reason I was interested in making this video, nothing else. After watching this video, you will have some complete clarity about how you can be prepared for the scenarios. Okay, the stocks I'm going to discuss in this are just for education purpose. There is no recommendation or anything from my side. If you want to invest or anything, please reach out to you as SEBI registered advisors. I'm not a SEBI registered person, and this is purely for education purpose. So let's get into the topic now. This BJP's manifestos, why we are talking about is, see, in case if BJP wins, what we need to expect. In case if BJP is not going to win, so then how we have to be prepared, right? So these are the two segments or two sides you need to be very careful. As an investor, you need to have a stop loss. You need to plan what is the risk and what is your reward. So that is the whole context of this video. So first thing is, market anywhere, right, in the whole world, market doesn't like any kind of a change. Okay, if in case BJP losses, market will not feel good about that. There could be a volatile in the market. And if BJP wins, there are a lot of possibility that market will continue to run in a bullish momentum. So that is the basic of this one. Whether it wins or not doesn't matter, but we need to be prepared of that. But as an individual investor, I don't want to get my portfolio disturbed, so it has to be in a bullish momentum. It's a selfishness, but that is how it is. Anyways, so just get into the. I'll just share some insights from the manifesto. If you have not read, I request you all to just give a glimpse about or read through the manifesto. It's not for a political purpose, just for investment insights. How you can derive insights from this manifesto is you have to learn, right? This is some. It's not a very complicated document. It's very straightforward. There are a lot of other things are there, but focus only on the macroeconomics perspective. Certain things were there, like something committed. If that happens, which sector or which industry will be affected or will be in a boom. That is what we are going to check. Okay, so this is the manifesto. So in the initial slides, you can see there are a lot of things they would be talking about, what they have done in the past, all those things. But I'll just walk you through the important slides that which you need to focus. Okay, so in this one, it is talking about the manufacturing related stuff and how we becoming a manufacturing as a product. So India is mostly like famous for services, but government is trying to make India as a manufacturing hub to become to build more new products and to export, right? So that is the goal. So in that thing, so you can see like there are three different sectors you can see, which is technology sectors, automobile and defense. Okay, these are the three key things which is been discussed or affected or could boom after this particular, after in case BJP comes into the power. A couple of stocks here will be like defense companies, because government is focusing more on defense developments. There are a lot of companies earlier earlier it was like very flat. Bharat Electronics used to be very flat, and now it is been booming like anything. And MTAR Tech, which are like working for developing a lot of technologies for defense, satellite and other things. So these are the sectors companies you need to focus from the defense side. And automobile, you have to check for Tata Motors, Maruti Suzuki. I'll also try to, after going through this slide, I'll pick a couple of stocks and try to explain the fundamentals, and based on our last couple of videos, how we discussed how to find the valuation of the stocks. We'll go through all those things after discussing this particular thing. Okay, so these are the stocks you can look based on this particular one. And next to a slide, if you see here, in this like innovations and technologies, more is towards AI, IoTs, biotech, all those things. So the next one is, in this I have tried to detail about few things in IoT research, and how the small medium business are like getting motivated by this manifesto, right? You see, providing easy working capital, like is planning to give a good amount of loan in an easy way, and the processing of loan, or if you need to start a business, the time taken to start your business are going to be drastically getting reduced. So those are the focus area they have. And other thing is adaptation of ONDC. ONDC means Open Network Digital Commerce. So government is trying to support this open source platform so that anybody can start an e-commerce very quickly in a very cheaper way. So that is the crux of this ONDC. And few stocks in focus related to the industries and the defense are Bharat Electronics, Hindustan Aeronautics, BML, Reliance Defense, like Reliance Industry is also supporting few area with the defense, and Ashok Leyland. So these are the four things, stock companies you can check into that. And the next one is in the AI, IoT and biotech, where in the IoT side and the manufacturing side, they are trying to focus more on developing the railway and the infrastructure part of it, right? So in that case, the main things like who is supporting railway, IRFC, they are the finance providing to all the railway related stuffs. And Titagar Rail Systems, they are helping in manufacturing the wagons and other things like Jupiter wagons also the same. They are also supporting wagons, and they are also exporting wagons for other countries like Africa and other countries, and RVNL, right? So these are the companies you have to focus for the manufacturing and R&D side. The infrastructure side, you have to see Larsen and Toubro, because there are a lot of stuff spoken about infra development in the manifesto. You can have a look on that part. So based on that, Larsen and Toubro, Ultratech Cement, because a lot of road development, bridge development, dams, because a lot of hydroelectric powers are being trying to be implemented, airport development. Tourism part, right? So there are a lot of developments are being proposed in this manifesto for the next coming years. So DLF they are very good in infra development in airport, the corporate buildings, right? In most of those areas, DLF will be part of it. NBCC, Hindustan Construction. So these are the things you have to focus for infrastructure. And companies to focus in energy and EVs, because government is focusing more on sustainable energy. It is a plan that by 2050, we need to be in carbon neutral kind of country, right? So that is a target. So it's a global target, but yeah, India is also trying to focus on that, to be part of that. I don't know like how much it is possible, but India is trying to working towards getting to carbon neutral country. For that, everybody has to be getting adapt to that. So for that, government is trying to provide subsidiary, implementing solar, implementing water mills, turbines, right? All those kind of sustainable part of things will be get into visibility on this particular time. So in that you can see Adani Green, Tata Power, Suzlon Energy. So these are the two companies. Renew Power and Ginkgo Group are very good companies, but they are not yet listed. If in case if they come for a IPO, you can look into that one. And on the pharma side, again, from the COVID time, everybody would know that India is working towards vaccines, other stuff. Now, in this time, the manifesto, they have given guidance, or they are talking more about API kind of thing. API is something like medicines will be there, but how that medicines will be given, like a oral or a syrup, right? There are different way the medicines would have been given or can be given. So for that, there are a lot of companies are working to manufacture those things. Earlier, one of my video, I discussed a couple of stocks like Nectar Life Science. Maybe just check that company as well. That's a API based company. And here, the main major, I'm giving an example here because whatever stocks I'm trying to give over here are like mid cap cap or large cap. Penny stocks or the small caps are risky ones, so try to avoid those things. Don't try to take more risk. If you have a risk appetite, then please go for that. But I normally don't much spend on those kind of penny stocks or anything. So if you see the pharma sectors, you can look for Sun Pharma, Dr. Reddy's. Dr. Reddy's are more into research and development. They are doing a lot of stuff. Cipla, Biocon, Lupin. So these are things you can look for. Healthcare and pharma. And also you can check for Apollo Healthcare. And from the agriculture point of view, government is trying to give more subsidy for farmers, trying to get them into a digital world. It will be easy for them to get loans and other things. Government can help them very effectively. So this farmers are trying to get enabled with a digital platform. So in that way, they can get all this pesticides, chemicals, nitrogen like phosphorus, nitrogen, potash, right? These are the chemicals farmers used to be rely on. So for that, government supports in getting them on time so that farmers should not get affected by the pest. Like the time when at each stage a plant get affected by pests. So farmers should not wait till that moment, so that if the government is planned properly, that for example, a farmer is trying to produce cotton. Okay, so cotton has a growth stages. Like at each stage, there will be some kind of a infection happens to the plant. Right? If I give the input to the government that I'm going to plant cotton, so then the government or the companies related to the chemicals which they manufacture for cotton plant, they get aware and they will start to dump their chemicals in their warehouse which are near to the farmer, so that the timing comes, these farmers get intimated and they will be getting the chemicals on time, so that they don't need to wait for a long time to get the chemicals. So that is the main agenda of this digital platform. So in that UPL, Dhanuka Agritech, Rallies, Coromandel, Pi Industries. So these are the these are the companies you can focus for the chemical sectors or agri sector, not chemical, agri sectors. And the tourism. So everybody know the things happen recently about the Mauritius and other things, right? So tourism is getting hype now. So there are a lot of developments happening. So for that you can focus for Indian hotels, Mahindra Holidays, Thomas Cook, Cox and Kings. Cox and Kings are having some kind of financial troubles. But yeah, so sometimes as a contrarian investors or someone can look at if you see any potential in that company, and if it is going down, you can bet on that, right? We can take a risk. These are the stocks I wanted to discuss. I'll walk you through some of the stocks so that you can understand how it can be analyzed and which stocks you can invest. So let me demo that part. Okay, just let's look into the stocks which we discussed. Let's take an example of MTAR Tech. This is the site called Screener. Screener is the best site for analyzing the fundamental analysis and checking the balance sheets and other stuff. Okay, let's get an MTAR Tech. By seeing MTAR Tech, immediately like few things you have to, whatever the stocks, when you check, you have to think two things. One is the market cap. It is more than 5,000 crore. It's a good thing. Okay, and look for PE, which is 70.77. Okay, just keep in your mind. Book value 215 and current price is 1,884. So normally 215, if you divide this by 215, right? The book value is something that if anything have gone wrong, right? The company can able to create some kind of a money using their assets, whatever they have, and they can give you that particular amount. Company goes bankrupt, 215 rupees is something that anything goes wrong, company can accumulate money from their assets. So that is the book value. Okay. It's like book value is something that if you are buying a land or property means like flat or something, you will be given a UDS, right? That means anything goes wrong, that UDS is there for you. Similarly, in the company stocks also. So if you see, it is trading at how many times you can multiply? It's almost 9 times, right? So for that you can immediately see to price to book value, which is 8.85. So this is 8.8 times trading at the book value. If there's a house you bought or land you bought for say 1 lakh, now that 1 lakh worth of thing is trading at 8 lakh. Now whether it is cheap or it is expensive, that is something that we have to find out, right? Why it is expensive? It might be in the middle of the city. There could be a revenue income can be through your rental and other things, right? There are so many things are there. So that we need to find. P is like price to earning ratio, right? For if I give 100 rupees, with 100 rupees, how much the company is earning for me, right? To make 1 rupee, company is spending 70 rupees. So that is like price to earning ratio. Okay, this is an example. Okay. So now let's see, if you see this company, go to PE. If you see the line over it, dotted line, this is the average PE for this particular company. Okay, for that right now it is under the PE, it's lower than the PE. Okay, so that may for this particular company, it is like looking like it is trading at a very reasonable price. Come to the quarterly analysis. Always go for a consolidated statement. Okay. If is okay. Before that, like peer comparison, you see a industry P. If you see 79.21 is the industry P. Ours is 70.4. That means it is trading lesser than industry P. So that is a good sign. Now come to the quarterly result. Sales. How much it is sales? See, if you can see clearly, it is sales is increasing, right? 153, 160. December it was less, so it has reduced. So there is something problem in the last quarter. And see the operating profit also reducing. Right? So there is some kind of reduction is happening. So we need to be cautious in that part. And look at the shareholder patterns. FIAs has reduced. Obviously, like FIAs are selling all our Indian stocks. So you can see there is a reduction in that one. DIS also has reduced their position in this stock. Public has increased. So public has more confidence with this company. Right? Public means not you and me. There are like these are companies like owning this. So apart from the promoters or FISDS, like individuals who are buying in a bulk, right? So they will come under the public category. Okay. So now let's use our formula. Okay. We'll go to Peter Lynch formula. So whether it is a bank or not, it's not a bank. So it's a non-banking sector. And what is the this is the ticker symbol MTech. And let's check the EBITDA. In an average, it is 65. Okay. Let's have it 65. So right now, if you see this Peter Lynch value is 12,000. Okay. And symbol it is saying buy signal. Now let's see Graham's formula. I'm doing it here. Okay. Just see this one. I'll do here. I'll just zoom in for you. So what is the growth rate in years? So here it is not shown. Let's see. Yahoo Finance has this one. You have to go to MTech analysis. Okay. It's not here. Let's check BSE. So MTech, we are not able to get the 5-year growth. EPS 5-year growth, we are not able to find out. So what can we do for that? Okay. So we'll assume that is the 20% a year. Okay. And in that case, it is giving sell signal. So Graham's formula is not able to find out because we are not able to find the growth rate. But Peter Lynch value gives a buy signal. Okay. So then we have to go with anyone. Like now it's our call whether to go with this or not. Right. So that is it. And to read about MTech, you can check this one. Like what are they doing? What are they into? They are into clean energy. They are into defense, and yeah, you can go through all those things. Okay, I don't want to cover all in a very detailed one, but I'm just trying to cover all the methods we followed so that it will be easy. Okay, let's look at other companies. Okay, the Ramakrishna Forging. I was talking about that company because it's an interesting company. You see this. Stock P is 43, so price to earning is 43.5. Okay, like it is trading at the price of 43.5 times. We go here, see almost like close to the industry P. What is the industry P is 30.23, and this is 43.5. It's a bit higher than the price, but let's look at the sales. It is tremendously growing. See this one. So that is why people are ready to pay more money for their earning, right? Yeah. So let's check using our tool now. RK Forge. Go to Peter Lynch formula. Here also, okay, EBITDA. EBITDA is an average, you can say 18. Okay, let's take 18. This is also giving a sign to buy. Let's see Graham's formula. We just need a growth data. If that is not available, may create a problem. See, okay. Next 5 year you can see is 30.1. Okay, we are having the data for that. Let's say 30. It is giving a sign for sell because it is saying 546 is the price I'm okay to buy. But the intrinsic value also 607. The current price is 757. It's a little bit higher side, right? But here it is giving a buy signal. We saw, right? So this is a growth side, right? This looks like a growth stock. That is why people are ready to pay for this one. So this company, this is into manufacturing of forged components for automobiles like railway wagons. Since we talked about the railway thing, right? So government is focusing on railway related stuff. So all the wagons and everything, if you want to manufacture, these are the guys providing a lot of accessories and components. So yeah, they have a good demand. And let's check one more stock. We'll see BEL. Let's see BEL, Bharat Electronics. It's a good market cap. Book value, it is trading at the price to book ratio almost like 10 times, 11.8. It is a debt free. Another thing, yeah, we have to check. It's a debt free company. Stock P is 48.9. If we check, P is way high. Let's see why it is high. You can see the growth of the sales. Their operating profit also it's increasing drastically. Okay, and it is considered. So people are thinking this is a growth company. And immediately let's apply our formula and see. So this is also giving a till 430 is a good sign to buy. Okay. BEL, and let's see what is in Graham formula. Why it's not showing? Okay. Bar Electronics. Let's see. It is 7.3 next 5 years. 7.3. Here also it is getting, we are getting a error symbol. Here for this also it's giving a sell signal. But yeah. So Graham's formula is normally it's very carefully made one. Okay. So its intrinsic value is 59.9 and the current price is 238. So it is showing sell signal. So you have to decide which one to buy or whether to buy or not. Now let's jump into some technicals. Right. Let's look at the technicals now. This is our Nifty. Let's check our BEL, which is recently we discussed how the stock is doing in the technical side. It is in a very high level. Let's see a weekly calendar. It was a very long time. It was consolidating. See how it was. Look at the. It was during 2000. When the stock started? December 98. It was 2 rupees at the point of time. Okay, and 2009 it was 6 rupees. 2014 11 rupees. Even here 2020 almost 20 years 22 rupees, and now it is 238 rupees. Who would have expected this kind of a moment, right? All we cannot wait. Who will wait this kind of time? We need a patience. But yeah, anyway. So right now it has been given a very good run up here. Whether we to buy or not, what is the pattern it is making? That we have to analyze. So let's say it has. So this is in the trend line resistance. May consolidate. So we cannot decide by this one right now. If we see everything shows high, but in RSI, if you see it's not good sign. In RSI, it is all making a lower highs. So there are a lot of divergence in this one. So right now, it's not a good sign for me to look into this one. Let's take another stock, which is what stock we discussed. Which one we discussed? Okay, let's say HAL. This is also is flying like anything. Okay, gone like whether it's the right time to invest or not. It's very complicated to decide now. Let's say from the Pharma side, Dr. Reddy's. Let's analyze Dr. Reddy's. Dr. Reddy's is showing some kind of it's consolidating for a very long time. I would say rather than focusing that, I would focus on this one. From since 2020, okay, it is in the same level, right? Almost now 2-3 years now. It's consolidating. There are a lot of potential in breaking out this one. To check the fundamentals of this stock, let's see the fundamentals. Let's see the fundamentals of Dr. Reddy. You see, book value is 1528. It's what? Yeah, man, it's something like 4 times. It's not a big deal. And P is just 20 price to earning. Let's see the, oh man, see, it's too low. Why it is too low? Let's see the reason. The sales is a problem. Sales is doing good. Sales is fantastic. Operating margin is static. Like it's okay. It's good only. Sales is increasing. See, sales is increasing very nicely. It is increasing. What about the debt? It is very less because see the cash flow 41.3 is not a big deal. So fundamentally and see face value also is 5. Even if it splits happen, the same value will get 5 stocks the similar price. So yeah, Dr. Reddy seems potential. So hope you understood why I took this subject. I tried to cover few stocks and few segments. So you can read the manifesto and you can also do some kind of analysis on this particular area. Understand the macroeconomics and just keep all the stocks in your watch list and try to track. And whenever possible, if it is in a good time to buy, even if the government BJP is not coming, if Congress comes in, these stocks may go down. But if the stock is fundamentally good, don't hesitate. So that's the point. Hope you understood. If you like this video, do like it, subscribe it, and share it with your friends. Thank you.